Stock markets witnessed a sharp sell-off as escalating tensions in West Asia weighed heavily on investor sentiment. In India, both the benchmark indices, Sensex and the Nifty, fell over 2%, with the Sensex closing at a little over 76,500, while the Nifty ended below the 24,000 mark at 23,882. The sharp market decline erased nearly 8 lakh crore rupees in investor wealth and turned out to be the market's worst session in over 3 months. The trigger came from fresh uncertainty surrounding the US-Iran conflict as US President Donald Trump said the ceasefire arrangement with Iran was effectively over, reviving concerns about a wider regional conflict. Those concerns also pushed crude oil prices sharply higher. Brent crude rose nearly 5%, crossing $78 a barrel, amidst fears of potential supply disruptions through the Strait of Hormuz. Investors will now closely monitor developments in West Asia and the trajectory of crude oil prices, both of which are expected to remain key drivers for the markets in the near term. So it has been a bloodbath on Dalal Street here in India, with the Sensex and the Nifty tanking 2%, Sensex falling nearly 1,700 points as Trump's comments hit investor mood. Crude oil prices jumping nearly 5%, even as volatility returns to stock markets around the world, including India. Let's listen to first what Trump had to say.
To me, I think it's over. I don't want to deal with them anymore. They're scum. You know what scum is? They're scum. They're sick people. They're led by sick people. And they're vicious, violent people. And if they had a nuclear weapon, they'd use it. As far as I'm concerned, it's over.
And we have my colleague Karthik Malhotra joining us from the newsroom for more. Karthik, here we are back to square one, back to uncertainty, back to volatility, aren't we?
Indeed, Krishna, here we are once again, and just as the markets were looking at some positive momentum over the last few trading sessions, here we have US President Donald Trump once again speaking, and every time he speaks, one does, look at the charts on the oil price, and then indeed, of course, even the stock markets, and that's exactly what we witnessed in India today. In fact, incidentally, it so happens that mostly when Donald Trump is addressing, he's talking at a time when the US markets are shut, and there are many sort of speculations that perhaps the statement could be reversed or recanted in a bit to at least, not hamper the US investor sentiment as much. But here in India, of course, like you mentioned, both Sensex and Nifty have tanked more than 2% each. I think the only reprieve, so to speak, came from the pharma sector, because on the Nifty 50 pack, you had 45 of the 50 companies ending the day in the red. And 8 lakh crore rupees is no small feat by any means of imagination. So I think investors are in for volatile times, and like you mentioned, I think one can't really assume that the worst is behind us, because the ceasefire was fragile, continues to be fragile, and in fact doesn't even continue to be a ceasefire anymore, from what we understand from the latest, which is coming in from US President Donald Trump.
Now, what does that essentially mean in terms of, one is that what we're looking at is that the gains, so to speak, since that peace deal was announced in the last few weeks, those gains are going to get erased, from your own portfolio, isn't it, to start with?
Totally, absolutely. I think all those gains have been erased. 19 June, if I remember correctly, was the day that the ceasefire technically came into effect. And here we are today on the 8th of July. So whatever little gains that the markets had made, remember, we are still far away from the lifetime highs of 86,000 levels and beyond that we had seen on the Sensex. We are still a long distance away from that. But as we were inching closer to that, those gains have been wiped out. So whatever little profits that investors were sitting on over the last 20 days, all of those seem to have been erased. And of course, the question really is, would you hold on for the long term? Because it's not just the war with Iran, which is obviously sending crude prices up, and that is negatively impacting investor sentiment here in India, but also this entire AI race on which India, in any case, and India's blue chip IT sector has been losing momentum. So overall, I think the question really is, how long is the long term going to be, and what is in store for the medium to long term, even if this short term volatility were to be ignored by investors at the moment?
Karthik, also along with it, especially for Indians, the concerns for availability of energy, be it petrol or LPG, those concerns are back to haunt us again, aren't they?
Yeah, I mean, we'll have to wait for some sort of official stand this time again on the Strait of Hormuz, which is the channel through which the critical sort of natural resources flow into India and many parts of the world for that matter. And remember, this sort of fresh trigger came because of reports of Iran actually attacking vessels passing through the Strait of Hormuz. And this, of course, is against the memorandum of understanding which the US and Iran had signed. So I think those question marks are going to re-emerge. One will have to wait and see what really happens to disruption of shipping in the Strait of Hormuz and eventually, of course, energy prices going high again. We are looking at Brent crude again in the vicinity of about $80 a barrel. It had comfortably fallen to levels of about $71, $72 a barrel. So I think the question of supply and the question of price are both likely to come up once again.
Right. Finally, before we let you go, Karthik, it's also important that, this situation, as it unfolds, it's important that, investors watching us, don't panic or do anything knee-jerk, even after an announcement like this, isn't it? We really don't know what's going to unfold, but then the right strategy to do in terms of the portfolio that you're holding on to is to ensure to keep it steady.
I mean, it completely depends on the risk appetite and completely depends on the goals that investors get into investing with, and of course the advice that comes from financial advisors. So I think at this moment, I don't know, perhaps there would be certain portfolios where financial advisors would suggest that stay put or potentially even accumulate more if there is some sort of a sign of recovery in the not too distant future. However, there could be some positions where financial advisors may ask investors to liquidate and perhaps not enter the market for some time. So I think that's a very individual call that has to be taken on the basis of professional advice that comes in, Krishna.